Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
Welcome back. I am your host, Attorney Stephen Leahy, and this is the IRS Radio Hour on AM 560, The Answer.
Well, Steve, this is the section of the show where you go to your blog and tell me, what is on the blog this week?
Well, this week on the blog, I wrote about the IRS Fresh Start initiative. And you'll see anybody who has IRS problems. If you go online, you'll see this all over the place. The IRS Fresh Start initiative. Take advantage of this new program. It's a fairly new program. It started it was in 2011 where they changed some of the rules and they made some of these things a little bit easier to take advantage of. So one of the first things they did. So some of the programs. So for instance, we talk on the show a lot about there's the 6 things you can do if you owe the IRS money. And the first thing you can do is you can pay them, write them a check, be done with them, or borrow money from somebody.
Oh, check. I have a check.
It's got to be a good check.
Oh, well, I don't have that.
I can't help you then. Or borrow money from someone, but get the IRS out, get them out of your life. Second thing you can do is an installment agreement. And the third thing you can do is an offer and compromise. And the fourth thing you can do is a currently not collectible status. The fifth thing you can do is bankruptcy. And the sixth thing you can do, and this is what a lot of people do before they come to see me, is you can continue to do nothing.
There's a seventh thing.
What's that?
Leave the country.
Well, I said that, but they will.
Oh, that's right. They can catch it.
That's right. That's right.
Forget that.
So of those things, we talked about installment agreements, offer and compromise, and also the currently not collectible. They have changed some of the rules. 3 things. Actually, 4 areas that were changed. One was the offer and compromise, and they changed some of the parameters. Same thing with the installment agreement. They changed some of the parameters, and we're going to get into that in just a second. Another thing they did is they changed the way getting rid of a tax lien. If you have a tax lien against you, they changed some of the rules on that. Another thing they did is they changed some of the penalties. So in 2011. When they changed this, if you had some penalties from 2010, if I didn't pay, if because of late payment I didn't have the money to pay them, they forgave some of the late payment penalties. Not late filing. If I filed late, they still got me with a penalty. But if I failed to pay, they waived that penalty for a year. Obviously, that's a long time ago. It doesn't help us today. But the things that they did change. So, for instance. Some weeks ago, we talked about the installment agreement and different types of installment agreement. One type of installment agreement is what they call a streamlined installment agreement. And this streamlined installment agreement makes it easier. It streamlines the process that the IRS will agree to. So generally, if I owe the IRS money, they're going to ask me to get all this information. I got to give them my tax. They have my tax returns, but I have to provide them anyway. And I have to provide my pay stubs, and I have to provide my bank statements, and I have to have a full disclosure of all my assets and all my liabilities. And it takes a long time, and it's very lengthy, and it's a fairly hard process. But the streamlined process cuts through all that, and they just say, well, if you owe, it used to be if I owed less than $25,000, they would just set up a payment plan. And the payment plan would be up to 60 months. Okay, so now with the Fresh Start initiative, what they did in the installment agreement, streamlined, is that they raised it from $25,000 to $50,000. So now if I owe $50,000 or less, I can get this streamlined program. And again, it makes it a lot easier. It also the streamlined program goes to again, it was $25,000. Now it's $50,000. And so now the next thing is the offer and compromise. The offer is really the big thing that changed the most, because offers were always they were only like 20% or 18% were granted. So a lot of people would go through this the process, because it is a hard process. That one, in an offer and compromise, you do have to give them all this financial information, and they go through all your financial information, and then they determine, and they have this calculation that they use. So there's three big determinations of how much they'll accept. One is, what is my disposable income every month? So they look at my income and they subtract from that some expenses. Now, the IRS were notoriously stingy. They didn't give me a lot of expenses. So, for instance, if I had student loans, they didn't permit me to deduct the student loans to determine how much they would accept.
But they forced you to pay them.
Yes, I still had to pay them, but they wouldn't accept. So if they're trying to calculate how much of a lump sum, because remember, an offer and compromise is when the IRS agrees to take a lump sum payment to settle my IRS debt. Okay, so if they're going to use they're not going to deduct all my expenses. Well, my disposable income number is going to be very large then.
Yes.
And so when and the next thing is the multiplier. Okay, so the multiplier, if I could pay the IRS within under 5 months, the multiplier used to be 48. So 48 months. So if I say, for instance, I had $500 a month in disposable income, well, they would multiply that by 48. And then so that's $24,000 that they would accept, plus my assets. Well, now the multiplier has been changed to 12. So now it's only 1 year. So that's a huge difference, right? Now it's only $6,000, a fraction of what they used to agree to. Uh-huh. If I could pay them between 6 months and 24 months, well, now the multiplier is 24, and it used to be 60. So a huge difference.
But they want the money in less time.
No, it's the same. That's the same amount of time that they would have done it before. It's just now the multiplier has changed, and
lower.
So much lower. That's right. And again, if they're agreeing to a lot more expenses, and so I can deduct a lot more expenses than I used to be able to deduct, then my monthly disposable income is less, and then the multiplier is less. Now that number is going to be something that I might be able to really actually take advantage of and use it to get rid of my debt. Now, the third aspect that we were talking about is your assets. How many assets do you have? So the IRS goes back, and if I have any equity, for instance, if I have an IRA, and that's where a lot of people get caught. I have an IRA. If I have a lot of money in my IRA and it's more than I owe the IRS, well, guess what? They're not going to agree to an offer and compromise because they can always take your IRA and pay off your debt. Now, there are ways to protect your IRA to make sure that they can't take it. So when the IRS has a lien against you, one of the things is they only have the rights that you have. So if I have an IRA and I don't have a right to access that money until I'm 65 or until I'm 70, well, then the IRS doesn't have a right to access that money until I'm 65 or 70. So they can't take it away from me. But if I can go to my IRA and I could take it out and pay the penalty.
But does that make them want to wait?
No, because remember, there's a statute of limitations. So
once you start paying,
so if I'm 45 and I can't take that money out until I'm 65, the statute of limitations will have run, and they won't be able to take that money from me. So that's one way I could protect my IRA. But most people don't have that kind of IRA. Most people have an IRA that they can get at, but they have to pay a penalty if they get at it. Mm-hmm. So now the next thing that they did is they changed some of the liens, some of the rules when it comes to liens, because they understand that if you have a lien against you, it makes it very hard for you to conduct your business. You can't really borrow any more money. It affects your credit score tremendously. So they've changed some of the rules to let you take off, to release the lien, and also take it off your credit report, which they never used to do before. So it used to be that if I owed less than $5,000, then the IRS wouldn't put a lien against me. Now, if I owe less than $10,000, then generally the IRS won't put a lien against me.
Really?
And another thing that they did is if I owe less than $25,000 and I've made 3 payments on an installment agreement, I'm going to pay them in full, and I make 3 payments on an installment agreement, then if I apply, they'll probably release the lien again. And so I won't have a lien. I could still owe the IRS money, and they'll release my lien. That's something they never would do before. So these changes have been a huge benefit for people who owe the IRS, and you should take advantage of them. Okay, I used to tell people that the offer and compromise was actually a farce. It didn't really work. It didn't work for almost anybody, but now it does work. Now it is starting to help a lot of people. And so if you...
Does that just come, like, say, can you go back retroactively now to, like, 3 years before
yes,
it was
if
covered?
I owed the taxes, yes.
So I go back to 2007, redo my taxes, and then these rules apply to
These
there.
rules apply to any money I owe the IRS today, no matter where it's from. Okay, so if you have IRS problems, one of these programs might help you. Call me at 312-664-6649. And remember, ChicagoTaxTeam.com. There's lots of answers there.
Okay, we'll see you on the other side.